Hey everyone, me Kevin here. I have big updates and big commentary for Tesla, Nikola, and GM. So if you want to make money with those four stocks, this is the video for you because I'm going to give you updates that nobody else is talking about, specifically on research and data and expectations. But first, I want to mention that starting at 4:57 a.m. this morning, I was jolted out of bed by Tesla being down 13% in pre-market hours. And the day didn't end much better. In fact, Tesla is now down 21%. Tesla did so poorly, it even did worse than Slack. Yes, Slack destroyed expectations, and their stock fell 15%. And this all comes on the same day that Nikola partners with GM. Three crazy bits of news, and folks, there's only one thing you could possibly guess that I did after all of these crazy bits of news that give you heart palpitations. It's to make sure that my favorite life insurance is still active, which you can get in as little as 5 minutes via the link down below. To make sure that I got my free stock with Webull by depositing $100 with Webull to get a stock worth up to $1,600. And of course, making sure that y'all have taken advantage of the amazing coupon code link down below for the Labor Day week pricing for the courses on making money from home with YouTube videos and stocks and real estate. But first, let's talk about Nikola and GM. Here's the thing. Nikola just gave GM an 11% stake in Nikola to partner with them on the production of the Badger pickup truck and parts for the Nikola semi-truck. This deal was valued at $2 billion, setting Nikola's market cap based on a $2 billion valuation for an 11% stake at just over $18 billion, which shares of the company quickly reacted to. Shares of Nikola skyrocketed 39%. They went as high as 50% intraday and closed at $50.05 per share. Just for giggles, remember, it was just a few weeks ago that I said Nikola was a buy under $30, and we had a really nice opportunity to buy the stock then. I also warned that the stock would crater down from its $90 per share price. Both of those things happened, but I will say, I think I got lucky on those. I did also mention that Tesla stock will probably plummet right after the split, but I'm the dude who decided to hold through it anyway. So I guess you kind of have to take that luck with an asterisk. At least I said it though. Anyway, on GM, because this is what's going to be very important here, is understanding the connection between GM, Nikola, and Tesla. So to understand that connection, we've got to understand GM. And I know that might sound boring, but it's actually, in my opinion, kind of interesting. There's some fascinating things I learned here. First, about GM, GM's struggling. You might have already known that. If you look at the stock for the past 10 years, you see it's been an underperforming stock. And yeah, it has a dividend of between 3 to 5% and has had that over the last 10 years. But it's no surprise the company has been on sort of this downward trend. The reason is the company has really failed to innovate. Now, while in fairness, car sales did recover out of the 2008 recession, car sales nicely increased between 2010 and 2017 at GM, they began falling in 2018 and 2019, and industry experts warned that this could be the start of a longer downtrend for GM. 2020 isn't getting any better. GM's second quarter year-over-year revenues were down nearly 1/3 of what they were in 2019. Or I should say they were down to 1/3. That is literally their revenues at the beginning of 2020 were just 1/3 of what they were last year in, well, the second quarter of 2020 compared to 2019. Tesla orders, on the other hand, in my comparison, haven't gone down. In fact, they've gone up substantially. Now, in fairness, Tesla has not really gotten to production capacity yet. Tesla barely delivers 500,000 cars per year. That's just 1/6 of what GM is delivering. And Tesla's not even up to the 500K number yet. That's just their goal for this year. They're delivering less than 400,000 vehicles per year right now. So it's maybe not so fair to compare these deliveries, but I will say Tesla is growing and GM is shrinking. Now, we'll talk more about Tesla in just a moment, but why would GM be trending down, and what does this have to do with Nikola? Well, GM is trying to push their electric vehicles. In fact, GM is working on 12 to 13 new EVs, electric vehicles, by 2023. Unfortunately, GM doesn't seem to be appealing to customers in the EV market. And appealing to customers is the most important thing about the EV market. So if you care about Tesla, you care about GM, and you care about Nikola, you have to ask yourself, who's your target demographic? Who drives EVs? Who drives Teslas? What's the market for a GM EV, a Nikola EV, and Teslas? Well, we'll talk about that in just a moment. But we have to know this. To appeal to EV customers, GM is thinking, hey, all right, let's partner with Nikola to manufacture Nikola's Badger, likely in hopes of making GM's brand seem more hip and more innovative to attract those EV customers. And that's great for GM. They need a kick in the butt after all, because right now their most famous electric vehicle is the Chevy Bolt, which followed the discontinuation of the Chevy Volt. That's B with a B for Bolt and V with a V for Volt. Unfortunately, the Chevy Bolt sold just 5,873 units in Q1 2020. That was actually up 36% from 2019, following 2 years of declining sales. The Tesla Model 3, on the other hand, delivered 50,900 units in the same quarter. That's about 8.5 times what Chevy delivered with the Bolt. That's pretty bad for GM. So quite frankly, I think GM is trying to jazz up its hipness by partnering with Nikola. But honestly, I think GM is just burdening Nikola with GM's failures. But let's give them the benefit of the doubt for a moment, and let's analyze what GM is also trying to do. GM is trying to jazz up their EV line with their driver autonomy system called Super Cruise. Now, remember going into this that Nikola does not have autonomous driving software. Nikola does not have self-driving features and has publicly stated that they don't even intend on creating self-driving functionalities. Well, enter GM Super Cruise. Super Cruise is Cadillac's driver assistance feature, which is part of GM, and it's expected to be included in the Chevy Bolt soon, which presumably would also be included in the Nikola Badger, since Nikola doesn't have a self-driving software or system or any plans to make that, and GM has one. So why not? If GM's gonna manufacture the Nikola, why not put Super Cruise in it to try to compete with Tesla? This makes sense. It's supposed to compete with Tesla's Autopilot. So, now in fairness, I'm speculating on that, but it makes sense, right? The pieces of the puzzle are next to each other and they fit nicely together. Time will tell if they'll end up getting put together. And in fairness, I think we can all agree Tesla needs some competition right now because Tesla dominates the space now. But I wouldn't hold your breath. See, GM's branding doesn't exactly scream EV or self-driving, especially when the Chevy Bolt runs around $37,000, which is basically in line with the Tesla Model 3. Even if it cost you a few extra $1,000s, you're almost better off getting the Tesla Model 3. For giggles though, let's compare GM's Super Cruise to Tesla's Autopilot. And then we'll talk about Nikola. GM is using Super Cruise on some newer Cadillacs, and this system is only available on compatible and mapped highways, which means you can't use it anywhere you want. With Tesla, you could turn on the auto steer system on any road as long as the lane lines are visible to the car. GM has invested in LiDAR technology. This is something that Tesla refuses to consider, and sometimes the LiDAR system, I will say, is considered to be better and safer than Tesla's system, which uses a camera system. However, there is something else that many experts say is keeping buyers away from GM's Super Cruise autonomy system. Super Cruise has a little black device above your steering wheel, or sort of behind and in the middle of your steering wheel, that tracks your eyeballs and makes sure that you keep your eyes on the road, otherwise it makes you take over.
What if I was wearing sunglasses? Well, we can try that out. It can see that I am looking where I need to be looking. If I turn my head to the side, it's going to warn me to look ahead, and there it goes. But I don't know if it's going to be able to pick up the side eye. If I glance away underneath my glasses, will it pick up that? Oh, it did.
Which honestly probably sounds like the right thing, especially if you're not used to autopilot. But it means if you take your eyes off the road, the car will warn you and kick you off autopilot. If you look down to send a text, which you shouldn't be doing, the car complains. You look at your girlfriend or boyfriend, the car complains. Also, GM does not include automatic lane change or automatic exiting from highways, which Tesla does. Tesla does not have eyeball tracking systems in its car either. Now, both Edmunds and Consumer Reports have decent videos comparing these systems. However, both of those companies actually prefer the Super Cruise. They prefer that the Super Cruise is only available on approved roads, and they prefer that it forces you to keep your eyes on the road. They call the system safer. But, we are investors looking to make money. And what's important to remember is the target audience for self-driving EVs. Remember earlier I said for Nikola to succeed, they have to win over the audience of people who drive EVs. The best audience that you have to win over is the Tesla audience. Well, according to Hedges, Tesla Model 3's demographics show that the average age of a Model 3 owner is 46. 84% are men, and only 56% of Model 3 owners own their own home, which is less than the national average. But Tesla Model 3 owners also have an average household income of $153,000, which is above the national average. So, Nikola is going to have to convince upper middle class entrepreneur-style millennials and people under 50 to jump ship and adopt some new restrictions like staring at the road and losing the other benefits of self-driving features with Tesla, like automatic lane change, automatic passing slower traffic, automatic highway exiting, automatic self-driving on non-highways as an option. And I mean, just a heads up, when I say self-driving, I don't mean full self-driving yet, though Elon is expected to announce that later this year. But think about it. Nikola is expecting to win people over with a lot of freedoms and luxuries and choice at Tesla, with systems that are actually much more restrictive and, dare I say, old-fashioned at GM. Now, in fairness, I will say, you probably should keep your eyes on the road, okay? But I'm not talking about whether or not we should keep our eyes on the road. Probably should. What I'm talking about is, as an investor, what is our target audience going to appeal to more? The restrictions over at Super Cruise or the freedom of Tesla? With Tesla owners being less likely to own a home, Nikola needs to remember that Tesla owners are also the kinds of people who, not necessarily saying this is always true in every case, but probably don't consider the financial stability of home ownership as important as an awesome car and the freedoms and luxuries that come with it. And so when you try to feed that audience more restrictions, it probably ain't gonna happen, okay? In other words, Nikola and GM, if they partner on the Super Cruise autonomy for the Nikola Badger, they're gonna have to convince wealthier millennials and middle-aged entrepreneur dudes to give up their freedoms in their Tesla for the sake of maybe more safety. In other words, I think GM and Nikola potentially just alienated their audiences completely, and to me, this is a fatal mistake. Nikola should represent hip, change, long range, advanced, and more features, not less. Which honestly, I don't believe your Tesla audience is interested in restrictions or more rules. I think Tesla almost represents the opposite, right? Freedom from rules. I will say though, the Nikola Badger has very good chances of helping us actually see a hydrogen fuel infrastructure in America. If you have hydrogen fuel cars on the roads that are also, well, they're like half hydrogen fuel and half EV. That's one of the options for the Nikola Badger. That's great because the more hydrogen vehicles are out there, the more demand there is for hydrogen gas stations. The more hydrogen gas stations you get, the easier it is for us to get a hydrogen fuel infrastructure for hydrogen semi-trucks. Remember, Trevor Milton says the big money is in these semi-trucks, but you can't really have hydrogen semi-trucks until you have a hydrogen fuel infrastructure. Until then, the only thing we've got is, well, the Tesla semi-truck. So at this point, I have to say, I'm disappointed in Nikola's decision to partner with GM. I don't see GM as innovative, and I worry that their clumsy Super Cruise is actually going to weigh down and burden Nikola. I somewhat feel like my grandpa just walked in and took over Nikola. Now, as a result, and I love my grandpa, I wish he was still here, but I will say, today I have sold a portion of my Nikola shares following recent gains. I'm also tempted to potentially further reduce my holdings in Nikola, especially as Tesla continues to fall faster than a house of cards. Now, that's okay because I also anticipated this coming and I'm okay averaging into Tesla at these lower prices. If anything, this gives me more of an opportunity to buy Tesla shares at, in my opinion, semi-reasonable prices compared to the insane prices we had just about a week ago. Remember, Tesla has fallen dramatically because of rampant speculation following Tesla's stock split announcement, then their stock split, and the theory that Tesla might be included in the S&P. Both or all of these were catalysts, and unfortunately they were all big failures. I did warn over this stock split hype, and that stock, well, the Tesla shares could come crashing down very quickly after a stock split, which is exactly what it did. And so now we have to ask ourselves, what do we do now? The answer to me is simple. Take 10% of your cash available and buy Tesla today. Then tomorrow, take 10% of your cash available, and if it's red again, buy more Tesla. I like buying Tesla when it's on a downtrend. I hate buying Tesla when it is on an uptrend and euphoric. Tesla tends to have these 21-day streaks of euphoria, and that's not a good time to invest. When prices go up, your risk goes up. When prices go down, your risk goes down. There's a reason why 60% of my portfolio is in Tesla, folks, and that's why I'm buying more. And this Nikola news reiterates that. However, it would not be unreasonable for Tesla to revert back to its prior resistance levels around 1480 to 1500 per share, which works out to a post-split price of somewhere between 295 and 300 per share. And yeah, I know that sounds really low and potentially really bad. I'm just saying it because it wouldn't surprise me at all. Thank you so much for watching. Consider subscribing, get your life insurance, get your free stock worth up to $1,600. Use that coupon code, and folks, we'll see you soon.